Hey guys, and welcome to another episode of MENA FX podcast. So Naveed, we had a lot of people asking us about the client's point of view. The reason being is that in the previous episodes, we spoke a lot about the broker's point of view.
Yeah.
So I just wanted to know, I want people to know that as a trader, how or what is the best broker that they can choose? What is the path that they should take?
First, you need to decide that what type of trader you are.
Mm-hmm.
I mean, even are you a trader or not? Why are you here? Then you will move to choosing the best broker for you. Because let's say you're not a trader. You're just here to take trades as not proper trading. Just basically you're gambling on the prices.
As the time pass.
As the time passes, it doesn't matter. Maybe you have extra money you want
some
to
extra
burn,
money in your
or
pockets. Yeah.
maybe you just even doesn't know how to trade, but you want to give it a try.
Mm-hmm.
And you come, you choose one broker, you fund your account, and as soon as your account gets funded, you will take the first trade, which I'm gonna come back to that and explain how or when should you as a trader take your trades. So as a trader, how to choose the best broker for you?
Mm-hmm.
First of all, you need to see that what type of brokers are you looking for? What is the capital that you want to invest?
Mm-hmm.
Let's say you're that type of client or the trader that you need a broker to be present in your region or your jurisdiction.
Mm-hmm.
Let's say you live in UAE or Dubai. Maybe you will only look through the brokers that are available for UAE, or they have an office in UAE. But if it's me, I would consider not only brokers who has an office in UAE or in that specific jurisdiction. So I think you need to look outside the box.
Mm-hmm.
To choosing a right broker for you. And what you're going to compare? You're going to compare how old is the company. Let's say your minimum should be not less than 5 years. As a what do you call
Trading experience?
No, not as a trading experience, as a company.
Okay, as a company.
Like how long this company has been in this market?
In this industry, right.
1 year, 2 years, 15 years.
And you were mentioning the jurisdictions. I was thinking, it's right. I agree with it completely. And the reason being is that, let's say UAE, we have a lot of brokers that are in UAE, and they will be competing very, very tightly.
Yes,
right?
But it's not necessarily to choose a broker that's been in this market for a long time. Maybe there are brokers that they've been recently joined this market.
Mm-hmm.
Let's say maybe they're even starters.
Right,
but they have, let's say, good regulations, and the people who are working who are running the show, they are reliable. Okay.
Mm-hmm.
So what I'm trying to say is that you need to set some targets for yourself to choose a broker.
Mm-hmm.
What is your priorities? Let's say it's 1, 2, 3, 4. So from let's say there are 1,000 brokers out there. You will have these 4 which are priority for you. So you can basically filter them.
Mm-hmm.
And let's say you will come up with 10 brokers. then it will be easier for you to choose the best broker for you.
Mm-hmm.
Me as a trader, I cannot advise somebody else or you to go open an account with this broker or with that broker.
Right, because my trading needs would be different from yours.
Exactly. So it depends on your trading needs. What do you need from that broker? All the brokers, they will give you the platform, they will give you some tools, maybe they will give you some analysis, maybe they will update you with the news. The majority of them, they do that.
Mm-hmm.
But what is the difference between all of them? You need to look for those differences.
Exactly. That's what I was trying to get at, is that most of the brokers, especially ones that are newly coming into the market, most of the brokers nowadays, they will be providing almost the same services, almost the same account types with very minimal, differences. And that's going to be very hard as a trader to choose from all of these brokers.
Actually, it's very funny. Sometimes you will bump to brokers that maybe they're not good as what you want, but let's say from bad or worse, which one will you choose?
Mm-hmm.
Or let's say from the best and good, with which one do you choose?
Mm-hmm.
It's gonna go in this way.
And that's exactly why people need to consider maybe a broker even out of the region.
Yeah.
That's
for sure,
exactly
yeah.
one point, one
It's
reason.
not necessarily for you as a trader to open an account to choose a broker which is in your jurisdictions or in your region. Sometimes you live, let's say you're in Australia, UAE, or some other countries. Sometimes it's in your benefit to choose the brokers which they're having, they're offshore companies, let's say,
Mm-hmm.
but reliable ones. Not any offshores. Okay, I live in here. There's a lot of restrictions for trading. Let me open an account with offshore companies. Not just like that.
Mm-hmm.
They are risky, but not all of them.
Right, because as a trader, so there's two things. So it's either mostly people would want a broker in their own region, which I think we have previously in the previous episodes we have gone through it a little bit. So it's that they want to feel and touch the broker. They want to make sure there is someone over here where they can get their, they can reach out if they have any problems.
Yes.
But on the other hand, it limits them to of course the regions that they have access to, which of course they have access to almost, I would say, all the regions that accept their basically their nationality, because of course every broker will have restrictions to certain regions around the world.
It doesn't matter what is your nationality. Usually it matters where you reside.
Mm-hmm.
So where do you live?
Mm-hmm.
Do you have any proof that you don't live, let's say, in X country, which is your home country?
Mm-hmm.
But if you live somewhere else, do you have any proof for that? And the
Right.
majority of the brokers, they accept that. So it doesn't really matter what is your nationality or what's your passport says.
So it's basically the region that you're residing in, you're living
Yes. By the way, you can even go to our website and see the comparison yourself. You can just go visit our website
in.
and choose 2-3 brokers, and you can compare them with each other.
Mm-hmm.
Easy as that, and you will get the full comparison and details. It will make it easier for you to choose then to go to each websites and see the difference between broker A, broker B, broker C. So what we try to do is to make it easier for the people to have a better comparison.
Right. And we have the way we have, I would like to also add this, that the way we have designed it is that people can easily filter out, based on their trading style and trading needs.
Exactly.
And we have also mentioned all of the important aspects, which is like where the broker is regulated from,
Yes.
what are the products that they offer.
Also,
so we have
there's a difference between our comparison and the rest of the websites out there, that we add our touch to it, as we added basically a bit of our experience to the searches. So it's a bit different than the rest of the platforms out there, and I believe that can make the searches and the comparison easier for the people.
And we mainly also focus on brokers that are well reputed.
Yeah,
And
not
very
any
well
brokers.
known.
Like maybe there is millions of companies and brokers. Not all of them will be there, because let's say there's some brokers are scams. Why we would put it?
That's
There's
exactly
no need
what
for
we're
that.
trying to avoid, and try to keep the most reputable brokers in
Exactly.
the list.
Good brokers, reliable brokers. Maybe new brokers that are, we think that they might be reliable. Maybe they're not 100% reliable, but what we think is that maybe they can be reliable in some levels.
Right. So of course there will be a lot of research done beforehand.
Yes.
Of course we will be speaking directly with the brokers that we will be listing on our website as well.
Yes.
To make sure that the client can avoid any kind of scam or any kind of, whatever it is that, traders are trying to avoid. And so we try
Not
to...
just only that, we're gonna check the website. We're gonna get the details from the broker itself. Like we have already contacted the brokers to get the infos, and what we do is that we compare the information that they sent us plus the information that are available in their website, and we compare.
We make sure that they're in sync and it's 100% the right
Yes,
information.
and sometimes we add more information that they are already providing in their website. For example, we contacted some brokers. It's a very funny story. Their names is one of the brokers that I bumped into. What happened is that we were talking to this broker and we were getting information and everything from them. And then when it reached to the location, I checked their website. There's no location whatsoever. And there, I can say for the past 3-4 years, they attended mostly all of the expos. And they had the biggest booth ever, and they had a lot of promotion and everything. Well, but when we came to this
Topic
point,
of discussion, yeah.
that all right, everything's good with you. You have this regulation, you have that regulation, you have this, but where's your main office? Do you have any other offices? And then they try to ignore it. It's like,
not even a location offshore?
Not even a location offshore, nothing. There is no location whatsoever. And this is not acceptable. Like, okay, because it's at the end, it's a partnership, right? So in the partnership, I'm a partner with you, okay, as a trader. And I tell you that, okay, the Farid, we have all the deals, everything looks good, and I live in, let's say, UAE. Where do you live? And you keep quiet.
Right. So even
where the trust goes.
Even me as a partner, like, where am I even supposed to, come and visit you?
Yeah.
In case there's any topic to talk about or discuss. Right. And also, I would like to mention that all the regulations from every broker that they mention will be checked again from our side,
of course,
to make sure that it's not just a name on their website, but
maybe just expired license, or even a fake license. Yes, we're gonna check everything. Also, we will have the links for the certificates, so you can even go check it yourself. The certificates.
That's fantastic.
I think that will be the best thing, because you will what we need you to do and understand is that whatever we do is in your favor.
Mm-hmm.
We want you as a trader to get the best services from any brokers that are available.
From the most credible brokers
Most credible.
available.
Yes.
And yeah. So guys, I would suggest you guys to visit our website. If you want to get started trading, you can go there and compare all of the brokers with each other. Right. So back to the topic.
Mm-hmm.
I had a question in my mind. So me as a trader, if I have an amount of money, X amount of money, and I wanted to invest in one broker, so would you suggest to me, as of course a more experienced trader, would you suggest to me or would you advise me to put all of my money into one account, or is it better for me to distribute them into multiple accounts? Like they say, never keep all of your eggs in one basket.
Mm-hmm. From the experience I have, I would not put all of my money in one account.
Mm-hmm.
And why is that? It's not because of that I don't want my money to be held in one account only, and maybe it's not safe.
Mm-hmm.
If it wasn't safe, I would never put any amount on the account.
Yes, that's the first rule, definitely, yes.
All right. So, but why is that? Is that maybe broker A offers better spread, let's say on gold, and broker B offers better spread on the currencies.
Mm-hmm.
So, and I'm trading on currencies and let's say gold. So I would use the broker A to trade gold with, and I choose broker B to trade Forex in.
Makes sense, and it's also easier to manage.
It's not easier to manage. It's that what is best for me. What do I want?
Mm-hmm.
Okay, this is my strategy. Maybe somebody else that doesn't care about this. Maybe their primary instrument is Forex. Maybe Euro USD.
Mm-hmm.
So they will choose one broker that offers the best services for that special product, and the rest of the products will be like secondary.
Mm-hmm.
And the majority of the trade will be on euro, let's say. So they don't care about the rest much.
So basically, it all comes down to the product that you're trading.
Yes.
And also the amount that you're trading. So let's say as a trader, I have maybe $10,000.
All right.
And I only trade on gold, right?
All right.
So again, would it still be, a good option for me to
have multiple accounts?
Yes.
Why would you do that? What's the reason behind that?
Maybe
broker. Let's say you found two brokers
mm-hmm.
that they offer the same specs on gold.
Mm-hmm.
The same. Okay.
Right.
You just need to choose one of them to trade with, and maybe your priorities will be changed based on the payment option and not trading anymore because they both offer the same thing.
Mm-hmm.
And this is how you choose the broker. But
right.
What if you trust one broker or both brokers? Why do you need to put your capital in two different platforms?
As my point, it would be maybe to reduce the risk of maybe getting, for example, if I get stopped out, or for whatever reason it is,
mm-hmm.
I know that I'm going to, for example, just lose 5,000 of my investment, and the other 5 is going to be safe.
All right. So, at the first place, why do you deposit 5? And why do you deposit 10K? Deposit 5K.
Okay.
That's nonsense. If you're happy with one broker and you think that broker is good for you for that specific product, you just choose that broker, and whatever capital you are willing to put at risk or invest, put that capital, and always, of course, you need to have some amount as a backup. But I see a lot of new traders what they do, let's say they went through all the comparison of the brokers and everything, and then they choose one broker, they are very excited for the first time, they open the account, everything's good to go, they will deposit the amount, and as soon as they receive the amount in the account, they take the first trade. Okay,
Like, what's the rush?
it's not only what's the rush, it's like you're here to make trades.
Make money.
This is not a casino. This is not a video game that you will get the credit, then you go spend it right away. You're here, first of all, to trade and gain money.
Mm-hmm.
Okay? In any business, you will not go and invest in a second. Like, okay, you have the money, you have the capital. Like, in what manner or thoughts you will take the first position or your first trade?
Like, on one basis, they're like
It's based on what exactly? Oh,
It's-
you saw the gold is rising like crazy. You go and it's like, okay, it's a good time to sell. But you will not know that it will keep going up. And in a few minutes, you will just lose whatever money you had in the account.
Mhm. To me, honestly, trading is like chess. I play chess, by the way.
Okay.
And to me, it's like, because every move that you make in chess has to be with a reason. I move as something as weak as a pawn.
Mm-hmm.
I have a reason behind it for doing so. So I think it's the same with trading.
Exactly.
Any trade you take, whatever volume it is, whatever amount it is, make sure you know the reason for doing so. You know, like I said, everyone needs to have a trading book, or everyone has one, and they need to stick by it. And I think it's very important, especially for beginner traders, ones trying to get into the market, trying to get their first trades, I would say.
Get a lot of questions from the beginners that they say, okay, I will not rush. I have the account ready. I have the capital ready in the account. Now, what do you think is the best? Should I buy? Should I sell? It's like, by the way, we do offer analysis also as well, but these analysis, it's not meant as signals or to tell you that where is the best time to buy or sell. It just for as a help for you to have a better what do you call it,
like an insight on the market. So basically, if you're trying to get a trade, again, it's going to give you that additional validation, whether maybe the price is going to go in certain direction or not. It's like I believe that's
no, what I mean is that we offer some analysis. So basically, this is for you as a help to have a better understanding and analyzing your trades. I mean, not your trades, your decisions.
mm-hmm.
Okay, let's say you decided to buy gold now. Okay, our analysis will help you to manage your risk.
Mm-hmm.
Let's say you decided to buy. All right, you will check also the analysis. What they say, will it approve it or no?
With your decisions.
Yes, with your decision. So if it says the same thing as your decision, maybe go for it, but don't double the risk. Okay, but maybe if it says if it says opposite of what you think, maybe lower your risk. Let's say instead of you wanted to take one lot, go for 0.5. So
mm-hmm.
what we are trying to do is to help you to make better decisions, less riskier for you,
Mm-hmm.
and at the end we want to help you.
Mm-hmm.
But again, don't take our analysis or anybody else's analysis as signals.
Mm-hmm. And it's not one
Use
of
them
those
as informations, as side information even.
Mm-hmm.
Okay, Don't make it as your primary decisions.
And again, I was going to mention that it's not one of those typical signals that people usually get on either on Telegram channels or maybe on websites where it tells you, euro sterling, buy at this price, set your TP at this price or set your stop loss at this price. It's not one of those typical channels.
Yes.
Because I believe, again, it's risky for me as a trader to try and go with that, because I don't know on what basis this person is even publishing these signals.
Did you know the free analysis are more reliable than the paid ones?
And
out
exactly,
there?
most of these
Why
channels
is that?
want you to pay for them.
Because let's say your analysis, you're the one who's publishing all of those analysis, and you're very good at it. Okay, whatever you analyze or analyze, you will know that, let's say, best case scenario or worst case scenario, it will hit 70% of that. Okay, and you're selling those signals. If you're that good, why would you sell it? Why wouldn't you take the? Why don't you direct yourself to take that position? And if somebody is that good, nobody will provide you any signals.
Exactly.
We provide signals to just as a small help for your decisions. That's it.
And they're free, by the way.
They're free, by the
Completely
way. Yeah, of course.
Anyone can have access to it. Yeah, to make a better decision, definitely.
I see a lot of channels. They sell signals. Some of them they sell in the website, maybe Telegram channels, maybe in different platforms. Even some of them they have apps. So you will subscribe to them and you give them monthly fees or yearly fees to get the signals. Why is that? Because they're not good at what they're doing.
And by the way, I wanted to mention that all this information is coming from them. First of all, some of the things they don't mention is that if this person is providing this signal, they're using a certain broker to take these trades on.
Usually, yes.
Yes. And so,
especially if it's technical analysis.
Definitely. So now this is what most of the traders don't consider, is that the broker that you're trading with and the broker that they're trading with have completely different spreads, different margins.
And the majority of those analysts are using the broker's analysis. So they just get some charting or the ready data, they just edit it and just sell it to you. That's why we're saying that don't go and pay for the signals. There are no use to you, which there are tons of analysis are out there for free, and they're even way more better.
More reliable, definitely more reliable.
No, you cannot rely on them, but you can get a hint. So don't combine these together, because at the end, nobody can say 100% or even 90% where the market goes. So prediction.
No matter what your experience, no matter how long.
Above predictions.
Definitely. No one can tell you the price is going to go up or down, regardless of the product, regardless of the person that's sitting in front of you and telling you that this is going to happen. Right. So another point is that, so me, again, as a trader, because again, we're mainly focusing on traders' point of view today.
All right.
And so I wanted to know, as a trader, if I want to reduce or minimize my risk of trading, especially to reduce the risk of being stopped out, what measures can I take? What is there any way that I can try and either reduce my risk or totally avoid being stopped out? Is there any way to do that?
I mean, there are always risks. You cannot avoid them, but you can get the heads up.
Mm-hmm.
The first thing that you need to do is to always, no matter what, have a backup money or capital. Okay, so let's say an event happens, you have the upper hand to protect yourself, first of all.
Mm-hmm.
Okay.
So just quickly, if I have like $1,000 as my savings and I'm
Mhm.
trying to invest, you'd recommend me not investing all of my $1,000. Maybe just invest $500 and then keep the rest in case it's needed for me to fund my
Exactly.
account again.
Yes,
Okay.
exactly. And sometimes I see clients, they take some bad decisions, or maybe even their decision was almost okay, but an event happened against them. Okay. They will hedge their accounts on almost zero equity. Almost zero means like the equity will be left with like $10, $100, $50, and the hedge amount, it's let's say 20K. For me as a trader, doesn't make sense. What's gonna happen? If you don't have more capital to add to your account to protect you or protect your trades, what's the use of that? Maybe the price will never ever come back to that level anymore.
Mm-hmm. I think again that is one great way maybe for traders to protect themselves.
If you want to add more capitals, but let's say that was all of your money,
Mm-hmm.
and you're not planning to add any more capital to it, if you let the account to step out, it's easier for you mentally, because your money is gone. So
basically,
why do you trying to provoke yourself? For what? In this, you just make it emotional, and you will just provoke yourself that, yeah, I have this much amount in that account, but the equity is $10. This makes sense. Let it be, stop out. You made a bad decision, it's gone, it's fine. You may come back later on to it.
mm-hmm.
Maybe after a month, after 6 months, after a year or two, it doesn't matter. Whenever you want to start trading again,
Mm-hmm.
there's no problem with that.
So hedging could be one of the ways where people can protect their account from being stopped out. So just as an example, let's say I'm trading on silver, okay, and I'm predicting that the market's gonna go up. So I long the market, right? I buy, and then the market goes against me. Just before I get stopped out,
Mm-hmm.
I hedge my account. Basically, I buy in the opposite direction, which I'm basically selling in the opposite direction. And so what happens is that my equity is going to remain in a certain amount, right? But then again, all of this is useless if I have no backup money to fund it back again.
Also, you need to consider swaps. So if your account got only $10-$20 equity left, and there's swaps, daily swaps of $10, why would you even keep it?
You can't even keep your account for that many months. Let's say for a month, for 2 months, you can't even
You
keep
can't
it.
even keep it.
You're going to be
So it's
stopped out.
better to close your positions after you hedge your positions.
Mm-hmm.
So at the end, you will end up with $20, let's say. It's better to just lose it.
So hedging works if you have a backup amount. Otherwise, it's
Otherwise,
basically
it's
pointless.
useless. Yes.
Right. But then again, just one small point is that if you think the market isn't going to go back to your favor, don't hedge.
Yes. Just close.
Just close.
Yeah, just close.
Right.
Yeah, 100%.
And so that's one thing. And then one thing that actually comes to my mind is that what people can do instead of hedging their accounts is that they can increase their margin, increase their equity, top up their accounts again. And that way, let's say if an account is going into a loss, they're about to be stopped out, and they know the market is going to go in their favor back again, but they do not have enough margin to maintain, for the market to go that much in loss,
Mm-hmm.
right? So they top up their accounts, the market goes down, 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 and then they know there's a point where the market's going to be reversed to their favor back again. So you top up your account. Again, all this is going to be pointless if they don't have a backup
Okay.
budget.
Yeah.
So I believe that's one way where traders can protect their accounts.
It's funny, I just remembered something. There are some traders, or I think it's not appropriate to tag them as traders. Just clients, they're just trying to gain money in any way, which is, it's not a bad thing. It's good, but if you want to do this, why do you come for trading? Go gamble. And why is that? Is that there's a lot of clients, they come to me and they say that broker X doesn't let me to open bigger positions. And why is that? Because they're trying to double or triple their volumes. Let's say they have $1,000 into their accounts, and they will take a product that's the needed margin is $1,000, so they can trade just one lot. They open one position, okay, then they hedge it, and they take another.
They open a full margin.
Full margin. They will
position.
open a full margin position, and they take another position, okay,
in the
then
opposite direction.
Opposite direction, then open it again. So basically, with $1,000, they take, let's say, 1.5 lots. Some of the brokers allow it, some of them they don't. But I think those brokers who don't allow it is just protecting themselves and the trader, because they're already using the leverage. If you want to get a bigger risk, choose a higher leverage or deposit more. You want to risk your money, right? So why don't you deposit more? Because this way is not a trading. You're gambling.
It's pure gambling,
Yeah.
basically. It's either
So instead of you getting stop out, let's say in $2 movement, you will get stop out in 20 cents. Either you make your money triple, let's say, or it will be the zero in matter of seconds or minutes. My question is, why would you come to this, which there is basically no fun in this? Why people come here? To take proper trades and, of course, to gain money. You're trading, and you're not trading because you love stock market or you love online trading. No. It's a profession. It's your profession as a trader. That this is how you make your money. If your profession is a gambler, your place is not here, not in this market.
Definitely.
You can go to the casinos. You can go play some other stuff, which at least you will enjoy more. But at the end, there are traders, or I will not tag them as traders again. There are some people that do that. And some of them, they don't even care. But I want the audiences to know that if you're new to this market, there are risks. It can be very good for you in a long run as an income. Also, I want them to not to rush to gain this capital. That it doesn't matter what is their target. But I think for an average trader, the income can be more than 20% yearly from the online trading of the capital that they invest through the year, of course. It's not going to be something fixed all the time. It goes up and down, and there's
Just an average
changes, an
figure.
average figure. I believe it's an average target can be 20%, which is, I believe it's good for any other businesses. Let's say you will invest to open a restaurant or a cafe. What will be your expected return on your investment?
Mhm.
Usually, for the first 1 or 2 years, you're not expecting anything as return, because you will just gain back whatever you spend it for that business. But the advantage of trading is that you put your capital not in the short run, but in a long run, you will get a good percentage back. But I think the average is 20% for a good trader.
Okay.
So I think that's it for today's episode. If you need to add anything, please do.
I'm good to go for this episode, and we are going to go more in depth about more, things about Forex. And again, we're gonna go through all what people usually need us to explain, so we can go more in depth. And I think we can wrap it up for today.
All right, sounds good. So we're gonna see you guys in the next episode.